We keep it with corporates. When the banking and NBFC result season started, the fear was there will be deep margin and hence profit cuts. But actually, the banking results season started with a bang, with the likes of ICICI and HDFC Bank barely showing any fall in margins, 4 and 6 basis points. SBI actually showed an increase in margins. But the end of the BFSI season was a bit of a dampener, with Bajaj Finance reporting, the king of NBFCs actually, showing a rise in NPAs and a rise in credit cost and lowering its loan growth target to 22 to 23% from the earlier target of 24-25%. So what's the final takeaway from the BFSI PAC Q2 results? I have with me Santanu Chakrabarti of BNP Paribas to take us through his picks. Good morning, Santanu. Thank you very much indeed for joining us. Let me start with the last. Bajaj Finance, which has thrown a bit of cold water on actually all the BFSI stocks. The stock was down 7% on the day after the results. It is still your best pick, you say. Aren't you worried that their MSME loans are showing so much of red?
Morning, Latha. Great to be talking to you again. So yes, Bajaj Finance coming out and guiding for a full year loan growth of about 22 to 23% was the clearest dampener out there, because all the credit stuff that you're talking about in terms of either credit costs or rise in GNPAs, while yes, there has been some worsening that they reported, the guidance range was moved by a very small amount. So what was earlier described as a 185 to 190 corridor was now made into a slightly wider 185 to 195 corridor. Now that, to ascribe a large price move to that level of precision will probably be spurious. So it is fair to say, probably in our opinion, that it is the disappointment around the full year growth, which you rightly point out is linked more to the SME segment, which they are saying is going to grow only 10 to 12% for the full year, is what led to the disappointment. Now, Latha, to be very clear, Bajaj Finance is our top pick within the NBFC space. But you remember this very vividly. I have had at one point of time, close to 60% kind of upside on the stock. But the stock has had a very sharp re-rating. So, in such a situation, even a small near-term disappointment tends to take a little of a stock price and probably given another opportunity for a set of long-term investors to come into this. Because when I step back from the disappointment of a slightly more muted overall growth in the next 2 quarters, what stands out for me is that they have not changed anything regarding their long-term guidance. And if anything, a lower base in the second half of 26 probably sets them up to put out a significantly more aggressive FY27 guidance than they would have otherwise. And finally, you have to see that, the SME problem which they had been talking about, their specific segment, the other bits, including rural, has now picked up very sharply. And they, of course, like most other companies, they have spoken of a fairly strong October, and they're building into that strength. So from that point of view, I see the current dip as a very clear opportunity. Having said that, obviously, I prefer my banking picks in terms of upside a lot more. Bajaj Finance, despite the 7% correction, is in essence now still a compounding story, not the sharp re-rating story it was, say, a year back.
Fair point. For Bajaj Finance, the quarrel really is, it is still what now, 5.7 times book. So, the worry is it overpriced? But I'm asking you to take 2 other takeaways from the Bajaj Finance results. We are talking about an A1 company, a AAA company. And that company is telling us that they have problems with MSME and problems with SME. Now, where did all the banks show their increase? Take Axis Bank. It was their MSME, their business segment, which they said grew best at about some 16%. ICICI grew that segment by 29%. HDFC Bank grew that segment by 16%. They're all A1 banks. But would you worry that MSME may be the next fall? That we may, if Bajaj Finance has faltered, won't you see it in the other banks when, the reckoning comes next year or something?
Right. So I think the first buyer beware I would like to start with is MSME is a very dangerous jargon in the Indian financial services context because it can mean a lot of things. It can mean
defined differently.
Yes, it's 80 lakh rupees or 70 lakh rupees for a Bajaj Finance top-end customer, while it may be 750 crores for a bank customer. Okay. So we have to be really careful in parsing through what each of these definitions mean. Having said that, I think, we even within the unsecured working capital loan business, which a lot of the NBFCs did, which was essentially a top-up on an existing term loan for a fully banked customer. And, some of the larger ticket LAP aligned segments have been showing some stress for 6 to 9 months. Now, the reason you don't see too much worry around that within, say, a HDFC or an ICICI, or for that matter, even an Axis, is merely because in the context of their particular balance sheets, that's not a very large amount. And what they call, SME, even within their retail fold, probably has slightly higher ticket sizes. Fair. So we just need to parse it a little bit.
Fair enough. Okay, let me hope that, we went through a big infra loan cycle in the 10 years ago, and then we went through MFI cycle, and then we went through unsecured loan cycle. I'm just worrying that it should not be an MSME cycle next. Thank you for allaying my fears. Now, just tell me, what's your pick of the pack in the NBFC space other than Bajaj Finance?
So, so we also like FedFina, but again, a lot of the re-rating has already happened there. We are neutral on something like an HDB because we think it's a decent compounding story, but a lot of the valuation is already there. And we have, our top reduce, if you will, or underperform is essentially SBI Cards, which was probably delivered the 5th or 6th disappointment in sequence. Okay. And still stock has probably not corrected as much.
Okay. Now, let me come to the banks, which you say is your far bigger favorite. You've upgraded Axis. Take us through that, because there was a disappointment with the asset quality numbers when they came.
Right. But, all things considered, if I look at the last 6 to 7 quarters, I think the market's next day reaction also proves it. This is perhaps the, best set of numbers vis-a-vis expectations that Axis has delivered in the last 6-7 quarters. Because every time Axis has delivered a set of numbers in the last 6 to 7 quarters, bar one, I think, the stock had corrected fairly sharply. So what positives do we see in Axis? Firstly, credit costs continue to remain elevated above what, say, their, if you define HDFC or ICICI as the peer set, then credit costs are significantly higher. And given, where even PSU bank credit costs currently are, or the slippage rates are currently going at, Axis looks a little higher than it should, given the quality of the franchise that we are talking about. Okay. But after a long time, there was better than expected performance on growth, profitability, operating economies, and such. And I think even today, what we have done is we have upgraded the targeted multiple from 1.7 to 1.9. Okay. Frankly, if this is a 15-16% ROE bank, it could command potentially mid-twos. So I have only unlocked a little bit of its full potential, given that there is some green shoots within the overall operating and ROE framework that they have been delivering.
Okay. What's your, finally, what's your expected earnings growth for the banking space for the current year and for next? Overall, Nifty earnings is not very impressive. Will BFSI earnings be much better?
So if I look at full year earnings, the growth is going to be low single digits in our expectation. So that's nothing to write home about. But please understand that, the fourth quarter of the previous financial and the first quarter of this financial was kind of the bottom of earnings growth. Okay. So if you start looking at the earnings growth, which the quarters or for the second half that is going to come in, I think by the time you exit the full financial year FY26, you'll be seeing double-digit earnings growth.
Okay. That means next year we should be expecting, close to 20% earnings growth from...
Potentially, if next year credit growth is also strong, what we could certainly say is that on a full year margin, just that delta between 26 and 27 can contribute 500 to 600 basis points of earnings growth. Okay. Plus whatever you do on loans.
Okay. Well, I will have to invite you for a bigger discussion on another day. Thank you very much indeed for joining us.